Now, my next guest says that fresh tariffs are a clear example of anti-growth protectionism, but he thinks overall the good outweigh the bad when it comes to Trumponomics. So let's bring in 42 Macro founder, CEO Darius. Darius, first of all, it's a new day. So calling someone a protectionist ain't as bad as it was 2 weeks ago.
No, not at all, Charles. It's great to be here. Thanks for having me.
So, okay, what do you make, though, of the comments we just heard from Jamie Dimon? People are taking a sort of second look at this, because I feel like every time we talk about this in Wall Street, it's always the Smoot-Hawley example, but there have been other times that we've used it.
Yeah, absolutely. So the Smoot-Hawley example, in my opinion, is a little bit misguided. What really matters as it relates to tariffs is the impact in the currency market. Typically, if you tariff a country, they tend to offset the tariffs by devaluing their currencies. And the issue here, as it relates to 2025, is if we significantly tariff China, we will have a significant China yuan devaluation. And if we do that, historically, we've seen sympathy devaluations on other currencies with respect to the U.S. dollar. And we cannot afford to have a too strong U.S. dollar in 2025 because this is one of the biggest years ever for the global debt refinancing cycle.
Is the dollar too strong where it is right now?
I wouldn't say where it is right now. I think the bull market can continue, but I would say another 3, 4, 5%. You're going to be talking about a significant reduction in global liquidity in, again, a year that requires a significant expansion of global investor balance sheet capacity.
Yeah. No, I like that point. I'd like to see it come down a little bit, even from where it is now. All right, let's talk about these executive orders.
Yeah, absolutely.
Your thoughts on them? You know, I mean, there have been a tidal wave of them. We heard they were coming. The market is reacting pretty well to them.
Yeah, absolutely. So, again, when we think about the sort of net impact of President Trump's economic agenda, there's some good, there's some bad as it relates to the likely impact on the economy and asset markets. On the good side, we obviously have tax cuts coming down the pike. We're already getting the deregulation ball rolling, and we're likely to see accelerated energy production. On the bad side of this, we're very likely to see the advent of fresh tariffs, and we're very likely to see the shutting of the southern border. And the reason the shutting of the southern border matters is because the millions of migrants that cross the border illegally, which I do not support, obviously, but the reality is it caused wage inflation to decline significantly and inflated corporate profits in the process, and you could be reversing some of that.
Right, but for Main Street, that's good news.
Well, it's great news for Main Street. It's great news for the people who voted President Trump in office. Absolutely.
All right, the tax cuts. Where are you with the tax cuts?
Well, look, so extending and expanding the Trump tax cuts will represent a small positive shock to the economy from the perspective of boosting fiscal sort of consumption and investment expenditures. To me, the corporate tax cut is probably the bigger market catalyst from here, because obviously just merely extending the income, the individual income provisions of the tax cut, the TCJA, that's not going to be much of a stimulus. The big stimulus will come from the corporate tax reduction.
The animal spirits feel like they're back, right? Even today we opened a little bit weak, your thoughts on where we are with the equities market right now and the animal spirits, how far can they carry us?
Yeah, well, look, I mean, I think there's still upside, at least through, let's call it, second quarter of this year, as a function of we got Treasury General Account spend down, we have the debt ceiling causing the Treasury to be out of the market in terms of net issuance, so that obviously creates a more demand for risky assets. So in our opinion, we do think the market can run, and animal spirits are supporting that. Right. However, we do see some catalyst materializing around mid-year. I think 1998 is a good case study for investors to go study.
All right. Speaking of studying, I got less than a minute, but there was a recent podcast, and you said that observation was more important than prediction.
100%.
All right. So people who are doing this on their own, trying to invest on their own, how does that apply to someone? Because, we come here, we started the show off at Wall Street predictions today. How do you take that and apply it in real life?
Well, look, absolutely. Just listen to the market. That's my number one advice to every investor that I interact with.
Don't fight the market.
Don't fight the market. The market is your friend. The trend is your friend. No matter if you study deflationary periods or inflationary periods, the number one performing strategy across every type of market event is trend following. Just pay attention to the market, and I think you do one of the world's best job at that.
I appreciate it, my man. Good
Charles,
stuff.
Great to see you, brother. Thank you. Appreciate you.
All right, folks. Trump and Elon Musk. They say buckle up because we're going to Mars. That's right. Here's the great news. Ava Autos is going to tell you how you can make money. Guess what? We're going to go to Mars and make money. You can't wait for that. I can't either. We'll be right back.